Hello, ladies and gentlemen. My name is Dimitar Kirchev, and I'm going to be your host in our podcast called Trading Patterns. With me is Mr. Nikolai Stoikov. Hello, Mr. Stoikov.
Hello, Mr. Kirchev, and hello to our lovely audience.
This week's episode, we're going to be discussing market cycle seasonality.
That's right.
Yeah, and its importance in trading.
Yes.
What do you understand when somebody tells you anything about market cycles and seasonality?
It's kind of very strange. I think it takes a while. It really takes a while. I have learned about market cycles, but my history says that like the first kind of business cycle, I kind of ignored it. Nobody really talks about it. You don't really take it seriously.
When was that?
Yeah, maybe from 2000 to 2006 or 7, I was really kind of ignoring the market cycle. And then to be able to kind of get the balls, maybe, to bet.
To participate.
To participate in those events. It takes another market cycle because you kind of doubt it. You begin to realize that, hey, this actually could be a good bet, but it's not a sure thing. So you're still kind of halfway there. This does not seem to be so kind of rare event. It seems like many people may have gotten at least 2 business cycles to surrender and begin to bet with the cycle and kind of become a farmer of the market and say like, okay, I really don't know what the market's going to do day to day, but I do have an idea where it's going to forward distribution is going to be. And that forward distribution is not a sure bet, but it's probably the best bet I know. But yes, that's it's kind of like 2 decades almost from knowing about market cycles to actually surrendering it and betting completely with the market cycle.
A while ago, I read that having a crisis is healthy for the economy from a broad perspective.
Mm-hmm. It's healthy. It's healthy. It seems like you can't. There is like a day and night. I mean, there's patterns that occur, and it seems like there is a predator and prey. There is like summer and winter. There is like man and woman. So there is a kind of opposite. And I guess there is like activity and then there's rest. So in that particular sense, there is periods of growth and periods of kind of like regression. We observe this with our own weight. If you begin some sort of a training regimen, you want to gain muscles or you kind of like lose weight. There's periods where you actually progress, and then there's periods of plateau, and maybe kind of even reversion to the mean, and kind of like regress. The opposite, straight line growth, that tends to be unhealthy for reasons that muscle tightness or like we know that cyclicality is everywhere in our life, and it's very normal to see it in the market. Whether it's good or bad, we don't really know, but its occurrence seems inevitable.
Okay, next question that pops in my head. You were actually one of the very few companies that made substantial amount of money during the 2008 crisis, correct?
Right.
Yeah.
Yes.
So you've seen the effects of a recession, of a crisis, financial crisis. Do you think that things changed from back then? Or first, have you analyzed previous recessions? And how would you compare everything that has been happening since the year 2020 to what happened before? Because that looks weird. That doesn't really look like a recession. I mean, the SPY is...
Yes, I mean, 2008 is a real scare. Compared to previous recessions, I think the only close parallels we could go to the Deep Depression. I really think that the Fed really did as good a job as any could have done. I'm sure mistakes were made. The one strange thing is that people's behavior changes very slowly. And while I think I have learned many lessons, I don't think that kind of the world has dramatically changed. I think at some point this could be repeated in a different kind of shape. So it's not going to be exactly the same thing, but I don't think the world has completely kind of learned all its lessons. That's my guess. I really can't be sure, but I don't see people's behavior changing dramatically since then. I mean, They were promising. This is like January 1st. People promised themselves that they'll be completely new people, but come February 1st, they forgot. Similar thing is like, they kind of swore that they're not going to do things like before in 2009 and 2010, but it's been 10 years. And people kind of not following up on many of those promises.
So there's not much of a difference comparing what's going on to...
Well, there is the precedence. As I said, like crises, if they come, they really don't take the same shape as before. So something else is possible, but I don't think it's going to be exactly the same trigger like the housing market and over-leveraging on joint mortgages. It would be something else, but I don't think that the world is like too much more advanced in terms of handling risk and understanding risk than 2008.
Okay, next question. There's a lot going on in the world right now. Like there's the Russia-Ukraine conflict. It feels like there's still a lot left over from the COVID-19 pandemic. So it kind of stacked up together. People are saying there's an insane amount of inflation because the Fed printed a lot of money. So can you shed some light? We're not going to go in depth with the Russia-Ukraine conflict or with the COVID-19 pandemic, but what's going on in the world right now? Like, what's all this with the big crisis coming, with the inflation, with the unemployment?
Right.
Just a quick note for the listeners. In the description down below, you're going to find links to the charts that we're going to be discussing with Mr. Stoikov.
Right. As I said, like one of my duties is to kind of mentor and maybe teach traders. And the one thing that you always have to do is simplify things. And just to give like the idea of for the audience, it's like our average trader is in his 20s, and the most important thing after trading is girls. Sometimes, and sometimes you have to kind of become some sort of giving like a girlfriend advice to people, or maybe potential girlfriend advice. And people describe the situations that are difficult to kind of bear in mind. And I always go back to the basics and say, look, women behavior is very complex, but there is a way to simplify it. If you believe that we are monkeys, then women are monkeys. And if a girl is interested in you, she'll probably behave very similar to what a monkey would be interested in a male gorilla. And if a female gorilla is interested in a male gorilla, she initiates physical contact repeatedly. And that's like the most overwhelming factor. What does it mean when a girl goes on a tear and loves your photos and gives you comments on Facebook?
Isn't that the equivalent of touching, or?
They're not. They're not. So, I mean, there's all kinds of hypothetical situations where they do, but the reality is if a girl is interested in you, she'll initiate physical contact repeatedly, not just once. And if she's not, she's probably looking just to be friends. And that's like a very simple way of looking at the world, but it tends to be actually very accurate. So in that particular sense, there's like the world is such a complex thing that we can't really explain every single variable. And I've come to believe that the most important variable is employment. So employment, and it seems like U.S. has a very good data, and the COVID crisis kind of skewed employment numbers quite a bit, created artificial unemployment that was known to actually go away, and I've slightly modified my kind of most important indicator to be long-term unemployment. What's going on in the world is I could best describe it's spring, maybe April, maybe May. This year in Bulgaria, it actually snowed on April 20th, which is relatively unusual event. It's not too unusual, but it's actually unusual. And if this was the markets, some people would be saying, wow, maybe there's going to be no summer. So maybe
It's gonna slow the entire summer.
if the cyclone continues, if things continue to get worse. But the reality is, we know that sun activity is going to increase going forward. So that kind of period of a little bit cold weather, unusually cold weather, is not going to last. And it lasted a few days, and there was snow on the ground. But similarly, once the employment cycle kind of turns in the direction of hiring, so unemployment starts decreasing. This is the allegory with the sun. Business activity is bound to increase, and while there could be crisis, some sort of short-term variations, like we're experiencing right now, my opinion and kind of my experience tells me that we're a lot more likely to see growth going forward for the next several years.
Okay, so from the graph that, again, you guys and girls can find the link of on the description down below, what I can see is that unemployment is almost as low as before the 2008 crisis.
Right.
Which is pretty good. I mean, before the housing market crisis, things were pretty good, right?
Right.
And job openings as of right now are at a significant all-time high. I mean, it's very obvious.
Right.
So both indicators are pleasantly positioned to show us that everything is all right. Yet, everybody's preparing for the world to end.
That's right. That's right. It goes down to something like this. There is something that could happen, and it's something that's most likely to happen. And if we return back to the allegory for the weather and say, like, we have a very much established record of what the average temperature is in April in Bulgaria. And each individual day or each individual season, temperature tends to vary. The averages, they are kind of like relatively stable. And any large deviations are likely to kind of like not stay that much. The reality is that the unemployment, especially long-term unemployment, tends to act as this some sort of average of the temperature. And it's just something that people kind of like, it's very hard to believe that once unemployment starts going down, it practically never turns around in a flash. It's really possible. It's really possible, but the reality is it's not. One of the allegories that I kind of usually love to tell people about this thing is about my experience with those indicators is that they discover Venus. And Venus was discovered in the 1750s, something like that. I'm sorry, it was discovered way earlier than that, but it was discovered that it has clouds. And immediately after people discovered that Venus had clouds, they imagined Venus was like the Amazon. They said, it's warm, it's because it's closer to the sun, has clouds. And those clouds must be of water.
It probably rains.
It must be raining. And people were planning eventually in the future will go on a vacation on Venus. And people made all kind of hypotheses that they're dinosaurs and so forth. And basically until the Russians sent like a Venera 9, I believe, to the surface and to broadcast what the surface was, and people didn't really know for sure. And turned out that it rains on Venus, but it rains molten metal. So that's the difference between kind of like what's kind of possible and what's very likely to happen. And it's very possible that Venus could have been like the Amazon, but it turns out it's not. And I guess nothing substitutes experience, observing those effects over and over. And until you kind of get enough iterations, or in terms of you get enough inputs. Tendencies for people is to believe that Venus is like the Amazon, and they're planning to go there with the flip flops and maybe a little bit like a sunscreen or good umbrella. And that's not going to help you. Temperature on Venus tends to be around 500 degrees Celsius, which is about 800 Fahrenheit. So, yeah. So it rains molten metal on Venus.
I see. And the subject of unemployment and job openings looks
Right.
ridiculous.
This is for our viewers, and the job openings is just something phenomenal. I mean, I've never seen something like this. Just to give the idea of what the job openings are, the average for a 20-year period would be something like maybe 5 million job openings. The average for a period of maybe 10 years would be 6 million job openings. And we're currently at 10.5 million job openings. And this is like a freight train. It's like once it gets going, it's very difficult for the freight train to stop and change direction. So while it's possible for the freight train to just kind of stop suddenly, the reality is there's quite a bit of momentum. And people say that, well, it's possible that those job openings disappear right away. It's possible. It just hasn't happened ever. Of course, it's possible that it snows in August, but it hasn't happened for 100 years, or maybe more. So, yeah, there is a difference between possible and most likely. So, yes, I don't think those job openings are disappearing anytime soon. Of course, if something very negative could happen, that could occur, but this is very unlikely.
And it seems like we're closing the gap from 2020, the unemployment gap.
Right.
So,
Right.
yeah. Based on those two indicators alone, we can gauge that it's not as bad as people think, at least not yet.
Right. I mean, people really overthink many of those situations. Think about yourself as a farmer. If you're a farmer, what's the most important decision you need to make, Mr. Kirchhoff, if you're a farmer?
When to plant?
Yeah, when to plant. I mean, there is a planting season, and if you miss it, nothing could be done afterwards. I mean, the crop is going to be a lot worse yield. So you cannot miss some sort of a planting season. You have some sort of a variation between when you could plant, but that's it. I mean, if the weather is unfavorable, you could wait a little bit, but if you wait too long, a crop would not actually have a good yield. So in that particular sense, this is like the decision that I've come to believe is that a trader needs to decide when to take a position and what to take in a position in. And I think this is an exceptionally good planting opportunity, And I've really planted some seeds.
Whatever we discuss in that podcast should not, I repeat, should not be taken as an investment advice.
Right.
But just for the sake of curiosity from our viewers, what kind of seeds did you plant?
I don't know, some trees.
From my understanding, you're long on the market.
That's right. I think that this is an opportunity that I haven't seen in the last 10 years. And of course, it could be wrong. But I have not seen something, a market that favorable for the last 10 years. And I'm willing to see what kind of things grow.
Okay, to the next graph, which is consumer confidence versus purchasing managers, the index.
Right. What do you think of that graph, Mr. Kitchen?
Yeah, it's overwhelming. The consumer confidence seems to be at all-time low. People feel worse than they felt from the 2009 crisis. And the crisis didn't even start.
Yes, I guess people are overwhelmed. The reality of this is that I think people are very scared. A lot of kind of relatively rare events have happened. Something like COVID doesn't really seem to happen every 100 years or so. So Now that we have gotten this kind of mostly under control, now we have energy crisis and we have like nuclear threat and we have war in Ukraine that nobody really knows how long it's going to last. Could it grow into something bigger? Those are all potentialities that are kind of making people worse. But the reality is those are situations that have surprised people on the negative side. But the kind of the pulse, the production of the energy, kind of like the lack of some sort of a large defaults, kind of very conducive to some sort of a lot more functioning economy. So people are worried that things getting a lot worse, and something that it's outside of the control of most people, and that's justifiable. But the reality is, if you take the pulse of that patient, the economy, the U.S. economy, that pulse is very strong. If we compare the present situation to 2009, the vital signs of the U.S. economy of the patient were actually much, much worse. The consumer confidence bakes into the fact that some sort of exogenous factors that could happen and worsen the present situation, while the consumer confidence or lack thereof in 2009 reflected largely events that had already happened, and people didn't know how long it's going to take to recover.
Right. What about the next? What about the other indicator, purchasing managers? What can you
This is ISM purchasing manager. This is really a graph that kind of takes a sort of a quantifiable look at businesses, changes in inventory, kind of like hiring processes, prices paid and prices charged. So those are all components of purchasing manager, and it measures activity, and this is kind of really the pulse. So for the listeners that are not going to be kind of like, or don't look at the graph, what the consumer confidence seems like, it's something like between 30 and 100 usually, and it's right around, it's something like, what is it? Is it 40 or?
No, it's a bit higher than 50, let's say.
50. Okay, so consumer confidence varies between 50 and 100, and it's right now it's slightly ticking up from its lows around 50.
Yeah, it's
yes,
almost at all-time low, just slightly below the 2008 crisis.
The ISM Purchasing Manager Index varies between 30 and 60, and the average is something like 50. And that's in the middle of the range. So what basically saying is that while consumers are kind of like at an all-time low, the business activity is measured by that particular index, what I call the pulse of the economy, is actually at an average reading, the very average reading. So
it looks like at a pretty good level.
That's right. And what do you think is going to happen? Do you think that that purchasing manager index could collapse and consumer confidence go even lower?
It could snow in August.
Right. I mean, of course it could happen, but the reality what happens is consumer confidence has a very, very bad predictive power. If at any previous kind of extreme readings, if you had bought the index, that would have produced results. In that particular sense, people tend to have overly negative projections of the future once negative events occur. So if you had bought the market at previous extreme lows of the consumer confidence index, that would have been considered a great trade. Could that not happen this time? Of course, it's possible that things could get worse. But practically every single time consumer confidence drops to that extreme level, if you had bought it in the last maybe 30 years, you would have made off very fabulous. That's all we are saying. There's at least 30-year record of that. I think numbers, that's what the numbers say.
Okay, so On to the last subtopic. People are blaming Fed that they printed out a lot of money.
Right.
There is way too much money in circulation.
Right.
What do you have to say about it? We have yet another graph prepared for you guys.
Right. It's really important that when people begin to trade, that you actually do all the data collection. So the overriding kind of public opinion or what's in the market is the Federal Reserve printed too much money, and that money shows up as inflation. And I did some sort of like a graph of sort of like a chart of GDP relative to M0, which is basically the money circulation. And that chart basically says that, yes, Fed tended to print a little bit more money than I think they should have, but it's not excessively so, nothing to justify a 10% inflation. Moreover, the excessive printing didn't really happen during the COVID years. Seems like the excessive printing happened in 2021, so maybe they should have stopped a little bit. But the most important thing is that money in circulation since December 2021 until June 2022 has decreased about 15%. And I'll repeat that again. The money in circulation, like the notes, the bills that kind of like flow for the economy and economic cycles, is repeated, kind of like gone down 15%. So the Fed is actually taking very good measures. And data since June is probably we're probably gonna see even continuous reduction in money in circulation, just because they've raised interest rates. And I think that at present level of like money printed, we are very near some sort of a 10-year average of money in circulation. And there's quite a few positive factors that are not yet in the numbers. First of all, we see gasoline prices, especially in the US, they're back to pre-Ukraine levels. So this is going to trickle down. People are usually very fast to raise prices when energy prices go up, a little bit slower to go down. This is going to be a tremendous boost in the system. The other thing that
but that takes a bit of time to manifest in the
right. It takes a little bit
numbers.
of time to manifest. Business is a very quick historical pattern. Is business is very quick to raise prices, a little bit reluctant to drop them down more. It's just a pattern. It seems like it's normal. So my expectation is like that inflation reading in August, given that gasoline prices are down 10% in the month so far, might be zero or negative again, just because basically transportation costs are probably everywhere, part of every kind of equation in terms of pricing. Inflation increases. So my thinking is that we have some sort of extreme reading in inflation of like 9% year to date. That's not justified by the money circulation. We actually see a decrease. And this is partly due to logistical and energy shocks to the system. Also partly due businesses actually growing up inventories as well, and ability of businesses to pass price increases. It seems like people have accepted that there's inflation. So maybe some of those price increases were basically a little bit too high. And we do see demand destruction. And we think that prices, overall inflation for the year would be less than 9%. And I think that maybe, hopefully, if we could get down to 7%, so to experience some sort of deflation for the rest of the year. That's possible given seasonality of gasoline prices tend to be downward trajectory after the summer. So again, the biggest component of energy of inflation increase was energy, which increased 33% until June. and we are seeing prices going down, and maybe will continue to go down.
You said that the biggest component of inflation is the energy sector,
Right.
30 something percent.
Yes.
Does that mean that if the Russian-Ukrainian conflict settles down, it's going to be significantly better for the world economy?
I'm not an expert. I don't know if it will ever settle down or maybe just die off. I do know that Russia continues to export oil. And that for the U.S. economy seems to be like the most important factor. We don't really know if sort of like settlement of the conflict is going to bring significant decrease to energy prices. Especially oil. We're speaking about oil only here, because Russia exports pretty much the same as before, just to different people. The Russia-Ukraine settlement conflict will have a huge positive for European natural gas prices, but that impact less U.S. consumers. It could impact them in terms of the U.S. is a big exporter of natural gas to Europe. So in some sense, that would also be one. But the biggest component is crude oil and gasoline prices. And those are already at the level before the Ukrainian-Russian conflict. So maybe even if the conflict is resolved, nothing big is going to happen to gasoline prices.
Okay, I don't know about our listeners, but from this conversation, I'm feeling pretty optimistic.
Oh, you do? Well, the most important thing is, as I said, there's no difference between a trader or investor and a farmer. And at some point, you have to kind of factor in and decide what your purpose for when you're going to decide to invest. And I think that this is a good time, historically speaking, to maybe consider this. We don't really know what's going to happen. Seasonality on the real world tends to be very strong, in the sense that after spring comes summer, and after summer comes fall, and that doesn't seem to change. Seasonality in markets tends to be not so strong, in the sense the season could be skipped. So for spring, we go directly to fall. That could happen. But it doesn't usually happen. It usually doesn't. We don't have a crystal ball. We don't know what the future is going to be. But I think that this is a very good spring season, and that's what my experience is telling me.
Thank you very much for this, Mr. Stoikov. To all our listeners, guys and girls, again, no investment advice is here. But if you take a look at the graphs, it does look better than what the media portrays it to be. Certainly not as bad.
Right. I think that the most important thing is that people see what they want to see in the graph. Like I've been showing people graphs for a very long time, and people always surprise me with their interpretation. The most important questions to ask yourself is like, what's the essence of those charts? How do they move? And if you look at the long-term unemployment chart, which seems to be, to me, is like the most important one, the essence of the chart is not to move very extreme. So the question becomes how likely it is to move extremely or not. Of course, anything's possible, and many things could happen. I mean, the reality is many of those charts have their own ways of moving things. And it's quite possible looking at those charts, you may actually draw different conclusions than me. But I could tell you is that I have drawn different conclusions looking at those charts for many years, and then decided that maybe the simplest was some sort of a more measured, kind of like things are going to be similar to what they were before. I mean, looking at those charts for many years, I was imagining Venus being like Amazon, and kind of like, what if it's like this is it and this is not? The reality, looking at Venus, we're entitled to only two conclusions. If you haven't visited, that it's warmer than Earth, and temperature variations are basically less extreme. So in the sense that the pole, the northern and southern pole are basically closer to the equator in terms of temperature. Looking at the unemployment chart, it's important to say like not what could happen, what has happened for the last 3-4 business cycles. And maybe this time it's going to happen again. So I encourage you to view the charts that way, not what could happen, but what has happened the last 3-4 business cycles.
There's no way that we're going to end this episode without bringing up our star of the show, Warren Buffett. It seems like we mention him every episode. Wasn't he the one that said, in order to make a significant amount of money, you need to have an opinion contrary to the mass of people?
That's
Something
right.
Like that.
Conduct your affairs contrary to what how the other people's conduct them. Yes.
Yes, exactly. So, guys and girls, maybe instead of listening to the media about how bad things are, try to have a different outlook to the market. And who knows, maybe like Mr. Stoikov, you could plant trees.
Yeah, let's hope they grow.
All right. Thank you, Mr. Stoikov.
Thank you, Mr. Kirchev, and thank you for the lovely audience.
Thank you for listening.